Welcome to this explainer. We're going to dive straight into the hidden financial realities of buying land in Washington state today. Now, if you've been tracking the real estate market at all, you already know the old saying, location, location, location. But we're going way beyond the zip code here. We are focusing on a massive, honestly often completely overlooked factor that is actively reshaping property values, and that is wildfire risk. We're unpacking the data and research from LandLimited to show you exactly how forest density, climate patterns, and fire exposure can quite literally make or break your land investment.
Own your land, own your future. It's a really powerful quote from our source, LandLimited, and it sets the stage perfectly for what we're talking about. I mean, it's an inspiring thought, right? But to truly own your future, you've got to understand the invisible risks that are lurking right beneath the dirt. Buying land isn't just about the acreage or scoring a beautiful mountain view. It's about knowing exactly what natural elements you're exposing your financial future to. Because if you don't factor in wildfire risk, well, that future might end up being a lot more expensive than you bargained for.
All right, so here is our roadmap for today. We're going to start by looking at the map of fire risk, move into how wildfires drive land prices, then explore those big insurance and financing hurdles, uncover the hidden costs of high-risk land, and finally wrap things up with opportunities and proactive mitigation.
Okay, jumping right into part one, the map of fire risk and pinpointing where the actual danger zones are.
Before we can even start talking about dollars and cents, we have to look at the geographic reality of Washington state. The state is basically split into two completely different worlds of risk. On one side, you've got the high-risk zones, eastern Washington, and the areas right up against the Cascade Mountains. Eastern Washington is practically the perfect storm for fast-moving fires just because of its dry conditions and wide-open terrain. And the Cascades? They carry huge risk because of that incredibly dense tree coverage, which essentially acts as an endless fuel supply. Now contrast that with the coastal and urban areas. Those regions generally show much lower wildfire exposure, mostly thanks to higher moisture levels and dense development patterns that naturally break up the landscape. So why does this matter to you? Simply put, your geographic coordinates dictate your baseline risk before you even open a property listing.
Moving on to part two, how wildfires drive land prices. Let's look at the economics of all this risk. It is absolutely fascinating how geographic risk translates straight into market economics. In those high-risk zones we just talked about, buyers are naturally pretty hesitant. They're factoring in potential fire damage, limited building options, the whole shebang. That hesitancy leads to lower buyer demand, which inevitably forces those upfront land prices to drop. But on the flip side, low-risk zones attract a massive pool of buyers who are prioritizing safety and stability. That high demand creates a super competitive market, driving upfront prices through the roof. It's really just a classic supply and demand curve, but it's being entirely dictated by the environment.
Which brings us to part three, insurance and financing hurdles. These are the gatekeepers of real estate.
Because here's the thing, a cheap upfront price tag in a high-risk zone definitely isn't the whole story. The critical question you really have to ask yourself is, can you even get a loan? Because while you might be completely willing to roll the dice and buy in a fire-prone area, your bank probably isn't. Lenders strictly assess wildfire risk before they ever approve a dime of financing.
If a property's risk exceeds a lender's internal threshold, you might be denied a loan entirely. Actually, lenders want to know their investment is secure, so they look to insurance as the backup plan. But in extreme risk areas, you're often facing sky-high premiums, super limiting coverage options, or, and this happens a lot, insurers might just flat-out refuse to cover you altogether. And if you can't get insurance, you almost certainly cannot get traditional bank financing. It's this massive cascading effect that completely locks out a huge portion of everyday buyers.
So with those massive financing roadblocks in place, the whole market shifts. This is where cash buyers swoop in. When traditional buyers are stuck on the sidelines because of nervous banks and insurers, cash investors, who obviously don't need a lender's approval, just totally dominate the extreme risk land markets. They take advantage of the situation to scoop up land at heavily discounted prices, which fundamentally alters the pricing dynamics of the whole region.
All right, part four, hidden costs of high-risk land. Let's talk about the long-term price tag of that purchase.
So what happens after you actually secure the property? That so-called cheap land you just bought with cash suddenly gets very expensive once you factor in your post-purchase budget. Local and state regulations often mandate some pretty strict land management. Suddenly, you are financially responsible for creating mandatory defensible space, paying to haul out dead trees, and keeping up with county vegetation regulations. Plus, if you're planning to build, counties often require fire-resistant building materials. That alone significantly jacks up your development costs compared to standard materials. You absolutely must factor these ongoing expenses into your budget from day one.
And it goes beyond just the direct financial hits. You also take on hidden vulnerabilities that mess with the daily usability of the land. Remote, high-risk properties often deal with heavily delayed emergency response times if a fire actually does break out. You've also got infrastructure risks to think about. Wildfires can easily take out nearby power lines, water systems, or access roads. Oh, and here is a really big one. Utility providers will sometimes intentionally shut off power to your property during hot, dry conditions just to prevent their lines from sparking a fire. Talk about a massive inconvenience that dramatically affects the livability of your property.
But it's not all doom and gloom. Let's hit part 5, opportunities and proactive mitigation, or how to practice smart buying.
Despite all those heavy burdens we just covered, there are massive opportunities here if you know what you are doing. If you are willing to roll up your sleeves and put in the work, those lower upfront prices make owning land highly accessible. So, here is your 3-step solution for safely capitalizing on it. Step 1. Proactively create defensible space. You have to physically manage the land, clear the brush, trim the trees, get rid of dead vegetation so a fire has absolutely no fuel to spread. Step 2. When you do build, strictly use fire-resistant materials. The source explicitly highlights things like metal roofing, non-combustible siding, and properly sealed structures. Step 3. Before you ever break ground, check your emergency access and response routes. Make sure you have a viable escape route and know exactly how many minutes it takes for the local fire department to reach your driveway.
Look, it really all comes down to doing your homework. Before you sign anything, you must evaluate these specific due diligence factors. Dig into the local wildfire history. Get out there and do site visits to assess the vegetation density with your own 2 eyes. Call insurers to check availability and costs before you even make an offer. Read through the specific county building regulations and literally map out the exact drive time to the nearest fire station. Using state fire maps and actually speaking with local officials is going to protect your investment and save you from some really nasty surprises down the road.
To wrap up this explainer, I want to leave you with a final provocative thought. Our source notes that climate patterns and population growth are going to continue to strictly shape how risk levels evolve all across Washington. Areas that actively invest in fire mitigation might actually see their property values stabilize or even increase. Meanwhile, regions that get hit with repeated fires are likely going to struggle to maintain any buyer demand. So as you stand there looking at that potential dream piece of land, you have to ask yourself, as climate patterns and population growth evolve, are you truly prepared to own your future? Because careful evaluation, smart mitigation, and a crystal clear understanding of the risks are quite literally the only ways to ensure your land remains a sound, safe investment. Thanks for joining me for this explainer, and happy, safe land hunting out there.